Good evening, everyone. Welcome to the financial reporting reset batch for our March 2026 attempt. Apologies for the delay, guys, because there was some technical glitch that we were facing, because of which I was not able to conduct the meeting earlier. However, I'm hoping that all who are not able to attend this meeting will be able to watch the recorded session of this. Okay. So we are going to start with the reset orientation. Basically, I'm going to highlight the points for the common reasons why students are not able to make it through the paper. Okay, so there are so many students who have scored in the bandwidth of 45 to 49. They have not been able to make it, right? And then, of course, there are students who have scored in the lower range as well. So, what are the mistakes that you should not be doing in the preparation phase? What are the mistakes that you should not be doing during the exams? These are the two key topics that I'm going to cover. And after that, we'll move to a live sum, which is the sum that we will be doing for the fourth session of our FR class, for the fourth, which I'll be doing for my fourth regular class for my FR batch. And all the research students who are here to watch can also watch this session, right? Can watch it as a demo session. So let's move ahead now. Also, the regular students can benefit with the research orientation because the regular students need not have to go through the same journey and then take an understanding of what the mistakes are. Let us all be proactive and try to take an understanding of what should be done or what should not be done. So, for all those students who are new here, who are not aware of who I am, a quick introduction. I don't want to take a lot of time here. My name is Aisha Faisal, and I myself am a ACCA and a CPA Canada member. I'm in the teaching industry for 10 years now, and consistently every quarter I have been teaching IFRS, whether FR or SBR. And I've been fortunate to teach more than 3,000 students. Now, I have worked in the corporate as well. So, my journey started with one of the top 10 CA firms in Mumbai, after which I moved to KPMG as a senior financial analyst. So, about 6 years of journey in India in the corporate. And after that, I moved to Kuwait. And right now, I am working with Uridu Telecommunications, which is headquartered in Qatar. It is, like I said, it is a telecommunication industry, and I'm working over here as a SAP S4HANA specialist, where from the architecture side, I'm helping them with the designs of accounts payable, accounts receivable, asset accounting, and other finance areas. Okay, other finance stream areas. Now, moving to the agenda of today, that why students fail. Okay, so first is y'all are making mistakes in the preparation, and then second is y'all are making mistakes during the exams. I want to crack both of them. Now, the first thing that y'all are doing is y'all are not practicing enough questions on the CBEPT platform, and forget CBEPT platform, y'all are not doing even enough study hub questions. Okay, so you'll know that study hub questions, section A, section B, practice questions, quiz questions, section C, constructed response questions, the 20 marker questions, they all are super important. You have to do them twice, guys, at least twice. And to make your life easy, what I have done, you all don't have to go to the study hub, go to every chapter, go to the practice questions. No, at least not my students. I have made this into a kit. I have turned this into a kit. So you have your section A, B questions, even section C questions rather. You have all these questions in the kit. Go to the kit, pick your I-16 topic. You have the practice questions, quiz questions, and their answers ready, right? You don't have to go to any website. They are ready in a kit available just for your ease. These kits should not be circulated anywhere. They are just prepared for your ease, okay? The second, or rather, I would say the third issue that y'all are doing is y'all are not covering the whole syllabus. That's a problem because it's not like other courses where your areas have been marked as okay. Asset family 20 mark is going to be tested, revenue 10 mark is going to be tested. No, absolutely no. You have no marking scheme given by ACCA body, which means there's no point of cherry picking and saying, oh, let me do these 10 chapters, so I am covering 80 marks. Let me skip the 20 marks. There's nothing that you can do in this manner, right? The only sure shot question that you know is ratios. Yes, ratios is coming for 20 mark, and the other question 20 mark could be consolidation or PNL. But other than that, for the remaining 60 marks, it's a complete question mark. You don't know what is coming. There is no plan to use time wisely. This is a huge problem because if you do not have your planner chalked for the next 40 days or 45 days as to when you're going to do what, of course, you'll end up procrastinating. You'll keep differing. Okay, you will say, okay, in your head you will say that you want to do IS 40 tomorrow, but you'll keep differing. Okay, next tomorrow, tomorrow, tomorrow. If you have a planner in front of you, you know that every day is something that you're doing, so you will not have the tendency to defer because you know you don't have that much time. Every day you have planned something, right? Maybe you can keep buffer days. In 1 week's plan, 6 days you're planning something, 1 week is a buffer day. 1 day is a buffer day. So if one day you don't do something, you have 1 day to help you, right? To cover you. But you should have a plan that way that how many buffer days are also there. In 40 days, you can't have 30 buffer days, right? In 40 days, maybe you have 4 buffer days, 5 buffer days, but not for 30 buffer days. So problem will be that you all will end up procrastinating so much that when you come to the last week or last 10 days is when you will rush and panic. So avoid that, keep a planner so that that planner in front of you can also make you guilty of not doing so that you end up doing. Okay. Not having access to keynotes for quick revision. You know that FR is a giant syllabus, right? So many standards to learn. You should have your pocket notes, your keynotes. Even if you're not joining any course, any tutor's course, even if you're not joining any tutor's course, you should have a plan for yourself. Okay, you should have a plan for yourself. Forget plan, sorry, I'm talking about keynotes right now. So you should have keynotes for yourself. What is keynotes? A bird eye view sheet. Well, I'll flash it to you right now. This is your bird eye view sheet. You should have something like this with you so that you don't have to flip through pages, 15, 20 pages. One page, entire chapter at the tip of your finger. When you revise, you will just take 5 minutes to revise it the first time because you already watched it like 4 hour session. You will take a 5 minutes to revise. The second time you revise, you will take 3 minutes. The third time you revise, you will take 2 minutes, 1 minute, and then one glance is enough. So you need a mechanism like this. These are your preparation issues. What about during the exam issues? Not attempting the whole paper is an issue. But try that for every question, there's something that you have been able to write, but that doesn't mean that you try to over invest time in sub questions and try to perfect them. That's one issue. Do not over invest time in sub questions. So this two I want to talk together. These 2 points I want to talk together. Completing whole paper doesn't mean that you over invest time in sub questions. Let's say there are some questions you don't know, okay? It's okay, flag them and keep them for last. Let's say if you're attempting a 100-mark paper and if you have just been able to attempt 80 mark out of it, 20 mark you could not attempt. Let that 20 mark be the most difficult element of that paper so that even if you leave it, you are at least in a position to say that, okay, you know what, I any which ways didn't know that 20 mark. It can't be that you left this 20 mark and you said, oh, you know what, this is the element that I knew and I missed it. That's the worst thing that you will do to yourself. So don't do this crime against yourself. Okay. Then the other issue is leaving questions in continuity. And this is a problem because you have a concept called OFR rule. You have own figure rule. Now, what happens in own figure rule is that even if, let's say, your requirement A1 answer is wrong, requirement A1 was making, let's say, full PNL, and that full PNL will give you profit for the year figure. Okay. Requirement A2 is finding EPS, which is profit for the year figure divided by number of shares. Now, you will be like, you know what? How will I get a right profit for the year figure? Of course, PNL is made up of like so many line items and they're tricky. Of course, something is going to be wrong, so my profit for the year figure is wrong. You'll be like, if I carry forward the same wrong figure here, EPS is worth 5 mark. Of course, this 5 mark, I'm not going to get a single mark if my profit for the year figure is wrong. This is an absolute wrong assumption. Why? Because of your own figure rule, this is an absolute wrong assumption. This own figure rule, this own figure rule allows you that, let's say, even if you wrote literally just like a number one over here, literally just you entered one and you use that number one over here, an examiner can see that linkage, that same number one has been used for the profit for the year figure. Let's say every other EPS calculation of yours is correct, the number of shares, weighted average, whatever method you've done, everything is correct. You will still get a 5 out of 5, even if logically this answer is not even making sense because of this one. Because of this number one figure, it's not making sense. You can still get a 5 on 5. Why? Because examiner will never penalize you twice for the same mistake. You did not get a correct profit for the year figure somewhere because of some mistakes above. He has already cut your marks above. He will not cut your marks again. So even if your answer does not match, but everything as a step is correct in your EPS calculation, you can still get a 5 out of 5. That's why leaving questions in continuity is a crime against your own self. Okay, I just want to make sure that students are not. We have issues with students not being able to join. Let me forward them the link. Okay, so this is one issue. Now, not showing breakup of ratio solution. So when you watch my ratio lectures in detail, you will understand why I'm telling this is so important. Okay, that if you do not show the breakup of ratio solution, if you do not show your numerator, and if you don't show your denominator, if you give the final answer, let's say for gross profit, you know your gross profit is gross profit upon revenue into 100. But let's say if you don't show what your gross profit is, if you don't show what your revenue is, and if you give a final answer, okay? Let's say your final answer 30% is wrong. It does not match with the examiner. You lost the complete mark. But let's say if you gave a breakup where your gross profit was wrong but revenue was correct, at least you'll get a point 0.5 mark. At least you'll get a point 0.5 mark out of 1 mark. And let's say if the same, okay, let's say vice versa. If your gross profit was wrong, but sorry, let's say your revenue was a wrong figure. Gross profit was a correct figure. So he gave you a half mark. And for revenue, he gave a 0 mark. But revenue will get repeated for operating profit also, operating upon revenue. Now, same revenue figure, wrong. He can see it's wrong. But if your operating profit is correct and if your revenue, same wrong figure is used, he'll give you full 1 mark. So can you imagine from getting 0, 0, you got a half mark, you got a 1 mark, you got a 1.5 mark out of 2 mark versus getting a 0 out of 2. Revenue will repeat in other ratios also, right? ROCE, again, potential to get full mark. So can you see the benefit? Now, when you watch my ratio chapter, you all will understand what I'm exactly talking about. Okay. Not doing appropriate commenting in ratios is a problem because ratios is very scoring. It's so easy to pick mark from ratios and from scenario. But because it's the last sum, not putting much effort over it is a huge problem because so many students fail with like 49, 48 mark. Not correct, no? Overtime invested in sub questions, as I already explained, that don't do this because guys, what is happening is when you over invest time, let's say EPS question only, it's a 5 mark question. You're sitting, you're trying to crack it, thinking you're coming close, you're coming close, what did you achieve out of it? What your aim should be to first at least get this 51 or 50 mark. First to at least get this 50, 51 mark. At least this much. After that, try anything more than that. So if you risk this passing and if you try to beautify or get the best sub answers, there's no point. You're never going to come out of the exam hall and discuss with your friend that you know what, my EPS answer is going to be perfect compared to everyone in the class. That's making no sense. Even if it's perfect, what do we do with it? You're not going to come and discuss this with me. You're not going to go and discuss this with your friends. You don't care about that. In a sense, if you don't care about that, then why were you sticking to that sub answer and trying to make it perfect? What you care about is that you have done enough to get the pass. So, over investing time in sub questions is a problem. Panicking for unique adjustments is a problem because, again, understand the 100 mark paper that is designed, it has been designed in such a fashion that 10 mark, 5 mark, nobody in the world is going to get it. Why do I say nobody in the world is going to get it? Because if that was the case, we would have many cases where quarter on quarter we would have 100 out of 100. But that's not the case for any paper. Every quarter, do we see a 100 on 100 mark? No, we don't see. Which means papers are designed in such a manner that that 5 mark, 10 mark is there so that nobody is able to do it. Literally, just some ranker material is able to do it. Someone who has done like X, Y, Z books, all the books available, let's say in the market, is using this knowledge practically, so he knows a lot about it in and out. They have an advantageous position. So these are the guys who might be able to get it. But if you see, that's also not the case. Quarter on quarter, nobody gets 100 on 100. So why to panic for something which has been designed that nobody will know? If you are finding it difficult, every other person in your class is going to find it difficult. So what's the point of panicking? Absolutely no point. Okay. So yeah, these are the mistakes that I want you all to avoid. Now, cheat sheets is something that I showed you. It's a one pager sheet that you should prepare for yourself if you're not joining any course. If you're joining my course, for every chapter you have a cheat sheet prepared. Okay. Now, the 40-day plan, I will quickly run through this. So, this is a suggested plan. Of course, you can have your own plan, but this is a suggested plan. How to use your January month? I will suggest use your January month to finish consolidation. So, one day you would watch consolidation as a concept and do one question practice. You can see, watch consolidation lecture and do one question practice. 3 days you dedicate for balance sheet practice only. You'll finish at least five sums, which is your study hub number, five sums. Same goes for PNL. Dedicate 3 days, finish your five sums along with watching. You're done with, in 10 days, you're done with consolidation. Then 2 more days for your associates. So in 12 days, you're done with balance sheet, PNL, and associates completely. You're done with balance sheet, PNL, associates completely. One day you can dedicate for disposal also. Last 4 days of the month are buffer days. If anything you could not complete as per the planner, you have your cushion. You have your cushion to complete it. Okay. Now from your February month, you can start with your asset family, IS 16, borrowing costs, government grants, all of this. So 2 days dedicate for your asset families. Then after that, finish all your single entity topics, leases, financial instruments, taxation, revenue. If you give your 6 days of your February month, from seventh day, you can target the next 20 mark topic. Again, like balance, how for consolidation, you were giving 3 days. For single entity, also give 3 days. 3, 3, 3, 2. 6, 7, 8. Eight marks, eight sums you are able to practice in 3 days. Okay. Cash flow, one day enough with one buffer day. Okay. Interpretation of financial statement, again, next 20 mark question, again 3 days required with one buffer day. Small topics towards the from 16th to 19th, all small topics can be watched and practiced. 20 to 28th, sorry, not 30th, 28th. Last 8 days of February is purely for revision and it's heavy revision. It's heavy revision. Okay, so 3 days of revision sessions you have, and we'll do intense practice, going through the standards and everything. So you can take a quick screenshot of the syllabus, not syllabus, the planner, and you all can, go through this. I will also quickly show you all that what is the kind of question practice that is pre-recorded available for you all. So in my consolidation of balance sheet practice file, all the study hub sums I have pulled, and you have to finish these many sums, okay, with along with answers I have given. Even pre-recordings is available. So 9 questions. For how many are balance sheet? 4, 5 are PNL. PNL has undergone a format change. PNL has undergone a format change. So wherever the latest format is available, I've given. For Pander, it's available. YGM, it's available. And Plank, it's available. Prodigal is old format and Moonstar is old format. Does that mean that you all will not have it in this quarter? Absolutely no. You will have both of these sums in this quarter, in fact, as a live recording. Okay? As a live session rather. So don't worry. Every question here is available for you. Then you have your single entity practice file. So single entity practice file also, you have all of them available. Anything which is not available, like Duggan is not available, will get uploaded as a recording. Will get uploaded as a recording, and will get uploaded meaning we have it in the system. IT team has it. We have it in the system. We'll just get it uploaded. Okay. So again, for single entity also, all the pretty much all questions you have. Okay. The question key of all questions. What all in the question key you have? So this is the questions to cover for IS 16, IS 2340 list. Chapter wise I've given. Okay. You have basically 176 questions of section A pre-solved. All the green taggings are pre-solved. 6 questions of B pre-solved. Section B, can you see 6 questions pre-solved? 29 questions of section C pre-solved. So much you already have for practice. Okay. And also I have shared with you all kits. Okay. the practice kits that are also available. So make sure you all are making the maximum use of these practice kits. Maximum use of these practice kits. Okay. Now, how do we do the session? I mean, how do we run the course in FR? So you all have recordings, you all have live classes, you all have e-notes, the cheat sheets that I showed you. Other than cheat sheets, if you want to read any text, you have to use your study hub only. Use study hub only. You have your TTA model where A assignments we will check. You have questions practiced straight away on the exam style platform, so the testing platform. You have test your understanding also. Then you have your mock exam, the 100 mark mock paper, which I will check and give you all feedback. Then you have grand revision, 3 days of revision, and all this is getting tracked. So when you get tracked, you get points through gamification model. You'll be like, what to do with the points? Well, the points will get converted into a discount percentage. Will get converted into a discount percentage. Okay. So you can use this discount percentage for your next paper. You can use this for your next paper. Now, if you have any questions, contact the student support team and take a screenshot quickly of what their ID is, of what their phone number is, of what their WhatsApp contact is. Take a quick screenshot, guys, and you can contact the support team for the same. Okay. Now, I will want you all to just at this point quickly put just a 5 minute timer, because after this we will get into a practice of 20 mark question. So I just want you all to all take a 5 minute break and we dive into a 20 mark question practice. Okay. So yes, just 5 minutes. Okay. All the students who have come for research orientation are very much invited to attend the question practice, which is the fourth regular class for our regular batch.
Absolutely. Aisha has lost.
All right, guys, please come back. The break is over. Okay, so we're going to practice one consolidation PNL with the new format. So we have Pander question. Pander, and this is your study hub question. So I'll just write live class 3. Sorry, live class 4, Pander. Okay, I also will bring to your notice again the change that has come about as per your new IFRS 18 standards, which is presentation of financial statements. Okay, so I'll keep repeating what is the new change. Even though from a consolidation perspective, it does not create that much of a problem because your format is exactly in there, but still, I'll just bring to your notice what IFRS 18 has brought about a change. Okay, so I'm going to flash the screen. Today is the last day when we're doing a consolidation of P&L sum. From next week, all the other consolidation of P&L that I've not done live will get uploaded. Don't worry. But I will from next week target the single entity P&L sums. Okay, single entity P&L sums. Okay. So yeah, let's get going. I will read the requirement first and then we will go to the background of this question. Okay. So the first requirement is asking us to calculate the goodwill arising on the acquisition of Salva Company at 1st April 2026, which is worth a 5 mark. And the second requirement is asking prepare the consolidated statement of profit or loss for Pander Group for the year ended 30th September 2026, which is worth a 15 mark. We're not going to do the goodwill calculation for today. That's not the agenda for the day because we don't want our focus to be on goodwill right now. Our focus is purely P&L, new format, IFRS 18. Okay. So yeah, let's get going. Now I read the background. On first, okay. Now one thing. Before even I read the background, I already absorbed that this is a P&L sum. So if you have done enough consolidation practice sums by watching my pre-recording, you will know the approach that we don't do anything first, but first and foremost, what we make sure is that our format is ready. We want a placeholder. As in when we read the sums, we want a placeholder to go and put the figures, to go put our line items. So we make sure that we have a placeholder for that. Okay. So consolidated, because you don't have marks for format at this level, even if you don't write for the year ended so and so, it's okay. Now you know that the first line is revenue and then less cost of sales. This is not changing. And after that, you have your gross profit. Okay. Now, after gross profit, the next mandatory subtotal as per IFRS 18 is your operating profit. So make sure that you have operating profit after that. After gross profit, they have the two type of expenses that they have taken as selling and general and admin, and then they have taken their operating profit slash loss. So selling, general and admin, and operating profit or loss. Then you have investment income, and then, of course, the regular format profit before financing and income taxes. So, this portion is the investing side of it. This was the operating side. Then you have the investing side, and finally, where the interest element comes is your tax side. Okay, and then you have, sorry, this is your finance side. When interest is coming is your finance side. Then you have your tax side. Okay, and then you have discontinued operation side if you have discontinued. But the main thing that you have to remember, that till operating you have the operating, till the investing part is there you have your investing side, and till the interest part you have your financing side. This is the format. Okay, so investing, and then I have my profit before financing, and okay, investing income or investment income and profit before interest and, or not PBIT, now they call it profit before financing and taxation. Then you have less interest expense. This is your second mandatory total, subtotal. Second mandatory subtotal, meaning operating profit is compulsory and profit before financing and taxation is compulsory. Less interest expense, then you have profit before taxation, less interest. This is not mandatory. Less income tax expense, and then profit for the year. Because this is a consolidation sum, after profit for the year, you have to show profit attributable to parent and NCI. Now, after that, towards the right, you will make your working notes. Your blocking space. Your blocking space for all that you will need in the sum. Okay. Then you have your group structure. And you have your second working note, which is NC as per PNL. Now, after this, if anything I need a working, I will make a dedicated working for it. So this is starting from subsidiaries profit, adjusted profit, and you have your NCI share. So I will block space for this. Here I will not invest time, nor will I want that this part should take a lot of time. In okay, let's say 3 minutes maximum you should get done with this. 3 minutes maximum you should get done with this. Okay. Now I'll read the background and then I'll start pulling points from every statement that I read if it's relevant to my PNL. Okay. If it's relating to purely goodwill calculation, I will not bother because like I said, my focus is only PNL right now. Okay. So let's get started with the sum. They're saying on 1st April 2026, Panda Company purchased 80% of the equity shares in Salva. The acquisition was through a share exchange of 3 shares in Panda Company for 5 shares in Salva. The market prices of Panda Companies and Salva shares on 1st April 2026 was 6 per share and 3.2 per share. On that same date, Panda acquired 40% of the equity shares in Ambra Company, paying $2 per share. And the summarized statements of profit and loss for the three companies are as below. For the relationship where it's Panda and Salva, you have 80%. So it means that it's a parent and subsidiary relationship. Where you have Panda acquired 40% for Ambra, then it is a associate relationship. So quickly in your group structure, you can put parent subsidiary 80, parent associate 40. Okay. Now, this acquisition happened on 1st April 2026 and your year end is 30th September. So April, May, June, July, August and September, 6 months. For 6 months in the current year, you had your subsidiary and associate acquisition happened on the same date. So again, 6 months. Okay. So this is, I will say, important piece of information it will drive your future calculations, right? So yeah. Now further, let's read further. See, all this purchasing, share exchange was purchase consideration adjustment, which is used for my goodwill calculation. intensive session, my first session, intensive session was done on purchase consideration. Best share exchange control you should have completely gotten, right? So I'm not repeating this. This part you all have complete control if you watched my first live lecture. Five sums on purchase consideration we had cracked, okay? Now, the fair values of net assets of Salva had the at the date of acquisition were equal to their carrying amounts, with the exception of an item of plant which had a carrying amount of 12 million and a fair value of 17 million. So there is a 5 million difference. So if you know in your balance sheet working to net assets at acquisition date, you will go and add it. This is required for my goodwill calculation. Right now I can't make use of this information, 5 million increase. For the depreciation part, I will make use, okay, in the P&L. The plant had a remaining life of 5 years at the date of acquisition of Salva. All depreciation is charged to cost of sales. So this 5 million increase in my P&L, where it plays a role? It plays a role for depreciation. It is related to subsidiary. So it will drop my subsidiary's profit. So subsidiary's profit, fair value depreciation. It will drop my subsidiary's profit. How much is the increase? Fair 5 million divided by 5 years. But for how many months should I pass depreciation? Can you tell me? Based on the acquisition months, can I take full year depreciation or how many months depreciation should I take? Can you tell me how many months depreciation in the chat box? Yes, absolutely correct, Rashida. 6 months depreciation only you should be taking. So, yeah, you take the same calculation, 5 million increase, and just take 6 months depreciation. Absolutely correct. Okay. Now, the same increase in depreciation will impact my cost of sales. So two places you have to give the impact. One is in the NCI working and another is on the face of the P&L. Okay, this is my latest working that I have done. The fair value depreciation 500 and over your face of P&L 500. All right. Now the next thing that you will do. In addition, Salva Company owns the registration of a popular internet domain. The registration, which has a negligible cost, has a 5-year remaining life. However, it is renewable indefinitely at a nominal cost. At the date of acquisition, the domain was valued by a specialist company at 20 million. Okay. Now, Salva owns the registration of a popular domain name. Now, in its individual books, it will not have its cost because it's a internally generated, let's say, domain name. But when a parent company is acquiring this, then yes, there is a value coming to it, 20 million. So at acquisition date, for my goodwill calculation, the net worth will increase by 20 million. Okay. Now has a 5-year remaining life. However, it's renewable indefinitely at a nominal cost. Because because this is renewable at a indefinitely what do you say? Indefinitely nominal cost, this raises a question that whether or not should you put a depreciation or not if it has an indefinite life. Can you all think and tell me logically? Let's say even if you don't know your IS 38 standard, can you all think and logically tell me? Should you put a depreciation to this if it has an indefinite life because it's renewable at a nominal cost? Rashida is saying no. What about others? Yes, logically, no. Logically, no. Okay, and as per standard, also, if it has indefinite life, no. Even as per the standard, if it has indefinite life, no. So, what impact it has is the only for my goodwill calculation that 20 million increase. Nowhere I'm going to go and put the depreciation in my PNR. Okay. Now, the fair value of plant and the domain name have not been reflected in Salva's financial statement. So, if there is a balance sheet, you go and increase, but there is no balance sheet, so I don't go and increase. Next, immediately after its acquisition of Salva, Panda invested 50 million in an 8% loan note from Salva. So after acquisition of Salva, it invested 50 million, which means it gave 50 million to Salva. All interest accruing to 30th September 2016 has been accounted for by both companies. Salva company also has other loans in issue at 30th September 2006. Now, if parent company gave loan 50 million to Salva, this is an intercompany loan. And can you tell me what will happen with the interest income Panda is recording and the interest expense Salva is recording? What to do? The interest income and interest expense, what to do? What should you do? This is intra-group loan. And there is an interest expense and interest income sitting. What should you do? For all intercompany items, what do? You should remove it. You should remove it. So, yes, you have to find how much that element is and you will have to remove it. Okay. So, on a 15 million, 8% loan note for 6 months. Okay. So, let's find it out. Working three, intergroup loan. The reason I picked this question is only because of mainly this adjustment, because this is a little tricky side. Okay. This particular adjustment, intergroup loan. So, interest income is going to be 50 million into 8% into 6 by 12. It's a 2 million. It's a 2 million. So I go and from my investing income, deduct this 2 million. This is fine. Now, when it comes to adjusting the interest expense part, you will be like, okay, you removed a 2 million from your as interest income. Let's go remove a interest expense also from your 2 million. Okay. Now, it's not that straightforward. From here, I can't just go and remove the 2 million as is. Okay, I'll tell you why. Because this 2 million that I'm trying to remove from subsidiaries 2 million. Okay, subsidiaries 2 million. And for subsidiary, just 1 second. Okay, just 1 second. I need to just perform one calculation to see that. Okay, now when you do this from the interest expense perspective, okay, from the interest income perspective, I removed it. What will happen from the interest expense perspective? Let's see. Intergroup loan, this is interest income. Okay, let's put this as intergroup loan income part, okay? So that we just calculated an income part. Now, how do we do the expense part to it? Expense part. Now, how much? I'm literally taking line by line, okay? How much was the expense of uh, parent, Panda? 1,800, right? It was 1,800. So, Pandas is 1,800 interest expense. How much is Salva's interest expense? Salva's interest expenses are 3 million. Is a 3 million. Now, if you may remember, how do you account or how do you put the, if here I have to go and put an adjustment, how will I do? I'll take full of interest expense of parent. Then I will take subsidiaries, 3 million, and I'll do into a 6 by 12. This is the normal approach. If I have no adjustment, this is my normal approach for the expense part. I have a minus sign outside the bracket. I've taken parents full. I have taken subsidiaries 3 million. If I'm not wrong, it is 3 million. And then I do a 6 by 12, right? But I have to be very careful here because I have a 2 million pertaining to intergroup loan, which I have to very carefully first remove from the 2 million. I have to remove it from here and then do a 6 by 12 and then do a 6 by 12 because I have to just do a 6 by 12 only for this 3 million minus 2 million, that 1 million element that is remaining. Only I have to do a 6 by 12 for that. Only I have to do a 6 by 12 for that. Okay, so it's very carefully I'll have to remove that element and I'll have to do a 6 by 12 only for that much. So I just want to make sure my brackets are correct. This I closed here and then I have one more bracket over here. Okay, so Salva's interest expense, I'll take 3 million minus 2 million, then I'll do a into 6 by 12. Okay, so this much, sorry, not this much. So this I have taken Pandas, this I have taken Salva's interest element. Okay. 6 by 12. Now this 2 million interest element that I still have, this 2 million interest element that still I have as an intergroup expense, I have already removed. I have already removed. So this is fine. Okay, this is fine then. So this much is my interest expense that should be visible over here. Let's see if I'm getting that much. Yeah, I'm absolutely getting the 2,300,000. So if anyone has a doubt in what I've explained you, will ask me. If anyone has a doubt over here, will ask me. Anyone has a doubt as to why I did not do a direct minus 2 million. I could have taken a 3 million into 6 by 12, and then at the end I could have done a less 2 million, but that would not give me the correct answer. So everyone understood that why from 3 million first I'm removing the 2 million. Okay, because that's an intergroup element just pertaining to subsidiary, and after removing that I should take a 6 by 12. Right? So nobody has a doubt here, right? So yeah. Okay, I'll repeat. I'll repeat. Okay. From an interest income perspective, I just calculated what the interest income is 50 million loan note into 8% into 6 by 12. 2 million is my interest income. I removed it from my investing income. It was straightforward. Just do a minus 2 million. You won't go wrong here. Okay. But when you're doing it for the interest expense part, I'll have to be very careful with the brackets with what calculation I'm doing. Why I'll have to be careful. Why I'll have to be careful. Okay, because this 2 million interest expense that you're deducting from subsidiaries results, and subsidiaries results needs to also be prorated for 6 by 12. They also need to be prorated for 6 by 12. So first I will have to make sure that this 3 million expense that I'm taking from subsidiary, I do not take any element of intragroup. I do not take any element of intragroup. I remove the 2 million from it. Then I do a 6 by 12. Then I'll get the correct answer. Is this understood by everyone, guys? Rashida, did you understand? You asked me to repeat. So, did you understand this? Rashida, you asked me to repeat, dear. So, did you understand this or no? Okay. So, I'm going to proceed now. Okay. Now, let's read the next adjustment. Panda Company has credited the whole of the dividend it received from Salva to investment income. Panda Company has credited the whole of the dividend it received from Salva to investment income. Okay. So, if you check the investment income, the 9,500 interest and dividends. So 2 million you have removed for the interest income, and there is investment income from Salva setting, which is the dividend income. Can you all think and tell me that should it sit in the investment income of consolidated? Should it sit? No. From where do I get this information that how much dividend should I remove? Is there any information that Salva paid how much dividend? Look in the notes. Here it is not. Somewhere in the line item above, I can see a equity extract. So of course an equity extract dividend paid could be there, and it is 8 million. But this 8 million is the total Salva's dividend payout. Does it mean that the total 8 million must have been given to Pander only? The total 8 million must have been given to Pander only. Does it mean that total 8 million has been given to Pander? Yes or no? No. This is 100%. You must have gotten only 80%. So 8 million, 80% remove. 8 million, 80% is how much you can check. It's 6,400. So 6,400 removed from here. Okay. And dividend paid is nothing that is an expense will be recorded from the entity who's paying. Okay. It's in an equity item. So you need not correct your P&L for that. Okay. Now this I adjusted. Now after the acquisition, Panda sold goods to Salva. Parent sold goods to subsidiary for 15 million, on which Panda made a gross profit of 20%. So first for the intergroup element 15 million, I'll make an adjustment. From revenue, I'll remove 15 million, and from my cost of sales, I'll remove 15 million. Then they talk about URP. My session 2 was heavily dedicated on URP, and you would have gotten a control on URP. So you know you have to make a cross multiplication table, and you have to identify the terms. They're saying gross profit of 20%, which means margin. So if they're saying gross profit margin, what should I take as 100? Cost price is 100 or SP as 100? What should I take as 100? Cost price is 100 or SP as 100? SP as 100. So if my profit element is 20, this is 80, and we will see how much are the unsold goods. Salva had one third of these goods still in inventory at 30th September 2026. There are no intergroup current account balances on 30th April, which means there is no receivable payable. But that doesn't mean, of course, revenue and cost of sales is not there because this is a current year's purchase sale, right? So one third of 15 million are unsold. So one third of 15 million. So I will have my URP on 5 million only. So if irrespective of the seller, whoever is the seller, where do I go and adjust my URP, guys? Irrespective of the seller, where do I go and adjust my URP in the P&L? I added to, no, not revenue. I added to, irrespective of the seller, I will go and adjust the unrealized profit. I will add it to cost of sales. Second, I'll check the seller. If parent is the seller, do I need to do anything further, guys? If parent is the seller, do I need to do anything further? No. If subsidiary was the seller, I would have removed the URP from my working to NCI. But because parent is the seller, I need not do anything further. Okay? Now, the non-controlling interest in Salva company is to be measured at its fair value at the date of acquisition. For this purpose, Salva's share price at that can be taken as an indicative. Okay, I'm not reading this full statement because NCI valuation is required for goodwill, and we are not doing the goodwill part, so it's okay. Then they're saying the goodwill of Salva has not suffered any impairment. However, due to its losses, the value of Panda's investment in Ambra company has been impaired by 3 million at 30th September 20x6. So if you know that, how do you deal with Ambra? Equity accounting. Share of profit from Ambra you will have to take. Ambra, share of profit from Ambra, which is a 15 million negative item, right? And the share in the impairment also you'll have to take. So you'll make a working for the associate, okay? Working 6, profit slash loss from associate. So share in associates loss is how much? It is a 5 million into how much percentage? 40 percentage. Okay, this is my profit or loss from associate. Then I have to take the impairment element also. So share in impairment, or you can take associates complete loss, associates complete impairment, and then just take a share in it. So that is also okay. I'll take a full 5 million here, and then I'll take a full impairment here, and then take a whatever the percentage. So impairment, they are saying 3 million. So total is this much. So share in associates loss for you. Negative 3,200. So take the negative 3,200 in the investing side. Loss in associate. I'll link it is equal to. Okay. Then we have All items in the above statement of profit and loss deemed to evenly accrue unless otherwise indicated. Okay. So now, after you're done with every working, you will do the fill in the missing blank approach. You come to the workings first and then go to the phase of financials. I'll repeat the last part. It's associates accounting. How do you do the associate accounting? So associate earned a loss of 5 million. There's an impairment of associate of 3 million. Just let me check if the impairment is of whole of associate or our share of investment. Okay, the value of Panda's investment in Ambra has been impaired by 3 million. So you can't take 3 million share then. Okay, you can't take 3 million share. So you'll have to do the correction here, guys. You'll have to make a correction here. This is a negative 5 million into 30% and full of impairment you will take. Okay, so make this correction. Because that 3 million is entirely our share of impairment, not 30%, 40%. Okay, 40% of this and full of impairment. So this is giving me 5 million. I've corrected this, okay, guys, because I saw that that's completely our impairment. So loss in associate or loss from associate is a 5 million, okay? Now, I told you that once you're done with every working, you will have to do the fill in the missing blank approach, meaning you have to come to the working notes and one by one check what is missing. So in my group structure, nothing is missing. But in my NCS for PNL, yes, there are figures missing. Okay, there are figures missing. Oh, yes, you are right. The loss from the associate will also be prorated. Absolutely correct. Okay, so this share in associates, this is first what I'm doing is I'm just taking 5 million into 40%. I'm just taking 5 million into 40%. But of course, what I'll have to do is that I will have to pro rata for 6 months, because if you realize, associate was a mid year acquisition, it was not there with you for the whole of the year. If you may realize, associate was not there with you for the whole of the year, right? So you will have to remove this. Just 1 second. So we'll do into 6 by 12 as well. Now, what will happen is that because I calculated an incorrect figure earlier, 5 million, but I'd linked myself. So this 4 million will automatically get updated. Can you see? This got automatically updated. I did not have to do a manual intervention here again to update the PNL. I had to just correct this figure. Okay. So my profit or loss from associate got corrected. Got corrected. Now, when I'm saying fill in the missing blank, now what is missing? In my NCI as per PNL, subsidiaries profit is missing. So what is a normal approach? We go to a PNL, we check what is Salva's profits. It's 21,000. And our normal approach is to do 21,000 into 6 by 12. This is a normal approach. Okay, but here my normal approach will change. Here my normal approach will change. I will not be able to do the normal approach. Why? Why? Because in that 21 million, our assumption is that that entire 21 million is even profits throughout the year. But there is one element which is a post acquisition element, and it was not even throughout the year. There is a intra-group loan which was specifically taken after getting acquired by Salva. It was taken after getting acquired, so that 2 million expense pertains to the last 6 months and nothing to do with the first 6 months. Okay, so if I do a even distribution of 21 million into 6 by 12, if I do this, if I do a even distribution, I get 10,500. But it's not correct. I can't do even distribution. What I will have to do is I will have to take 21,000 and remove the impact of the intergroup loan. Okay, what I have is a 23,000. What I have is a 23,000. Okay, this 23,000, if I do into 6 by 12, I have 11,500. From this 11,500, if I want to have purely post acquisition profit impact, full 2 million I have to remove from this 6 months. Okay, I'll show you. I'll do a dedicated working to show this. Okay, what I'm trying to say. I'm saying not like we can't go the like regular way and do a 21 million into 6 by 12. This is the second tricky adjustment here. Okay, the unique adjustment here, working seven. Subsidiaries, post profits. What will you do? So, what is subsidiaries total profit for the year? 21 million. Adjusted after removing post interest expense impact. I'm seeing post interest expense impact. So if I have to remove the post interest expense impact, I'll not minus, I'll add, because 21 million you must have gotten by minusing the interest element. I want to remove the impact, so I'll add back. So adjusted subsidiary profit is a 23,000. Okay. So if I take 6 months post profits, 6 months post profits impact. So I'll do a 23 million into 6 by 12. But this will not be completely correct because this 23 million is now adjusted for interest element. Interest was element should be there, but in the post period. So this I'm saying post profits, not pre profits. So if I'm saying post profits, then entire 2 million impact should come here. So the distribution is not even. It's not even 21 million into 6 by 12. It's not 11, 10, 500, 10, 500 split. It will become uneven. 11, 500 and 9, 500 split. So 9, 500 I'll take over here. So I'll link this cell. Now, if anyone has a doubt over here, will ask me that what I have done and why I have done. If anyone has a doubt, will ask me that why I have done 9, 500. Okay. Now, the only adjustment that you have. Okay, yeah, I'll repeat. I knew students might ask me to repeat. I'll repeat. Guys, normally, what do you do for your subsidies profit? You do a very even distribution. You take subsidies profits 21 million and you do a 6 by 12. I did not do a 6 by 12 because profits are not even. There is one element which is not even. There is one element which has only a post acquisition impact. It was there, the loan was taken only in the post period, which means the interest should impact only my post profits. So if I do a 21 million into 6 by 12, if I do a 21 million into 6 by 12, then this 2000 will not get catered. Okay, so that's why I add the 2000 back. I have a 23,000. Then I do a 6 months profit of that. Or let me do this thing also. 6 by 12. Okay, that no. So this is only the right way. The other way is not right way. Yeah, this is only the right way. That you have your usual full profit, remove the post acquisition adjustment impact. To remove, you can't do minus because it's an interest element, so you'll have to add back. This must have been deducted. That's how you came to 21,000. You want to go to the profits that were before considering the interest element, which is 23,000. So when you do a 23,000 into 6 by 12, this is fine, but you have to now do the minus 2000. The minus 2000 that you did, the 2000 that you added back earlier, now do the minus 2000, specifically from post profits. So this is how I did it. So I'll get my adjusted profit now. And from this, I'll take NCS share, which is going to be 20%. So NCS share in your PNL, face of the PNL, it will come here. So now I'll finish. Now intergroup loan, all these adjustments are done. Now I'll finish the face of my PNL. So face of my PNL, I'll have to quickly do a to and fro. Pander 210, Salva 150. So be careful. What I'll do is I'll take a snapshot. Instead of going or doing a to and fro, it'll make our life easier. I don't know. Okay, I have this snapshot. Now I'll quickly close this. Okay. So I have a 210 full of parent I'll take plus 150,000 into 6 by 12 very carefully and then minus 15,000. Okay. Then for cost of sales, negative sign outside the bracket. Take full of parent 126,000. Subsidiaries, again, open a new bracket 100,000 into 6 by 12. Then you have a plus 500 as an adjustment, minus 15,000 as an adjustment, plus 1,000 as an adjustment. So you have closed the bracket. So you have 162,500. So you have a gross profit of 107,500. We can quickly have a look if that's correct or if you have made any error. Yeah, it's absolutely correct. It's tallying. Okay. Now, selling expenses, negative sign outside the bracket, 11,200 plus subsidiaries is 7 million, 7,000. So into 6 by 12. Then you have general and admin. So negative sign outside the bracket, 18,300 plus 9,000 into 6 by 12. So you got your operating profit, the compulsory mandatory profit you got. Then you have investing income. So investing income, you have 9,500 for parent, minus 2,000, minus 6,400. You have 1,100 still remaining. You have your loss from associate, then you have profit before financing and taxation. Interest expense you already calculated. Income tax expense, negative sign outside the bracket, 15 million plus 10,000. So 10,000 into a 6 by 12. So you have profit for the year as 44,800. You take the parents' share. So remove NCS share to get the parents' share of 43,000. Okay. We can see if there's any error. It's absolutely correct. 43,1,800. So you have the answer. So what I'll do, guys, is I'll share this sheet with you all in the class so you all can practice this. Two important things to practice is this sub profit, why it's 9,500. Okay. And this interest element part. Okay. This I want you all to practice. Now, let's say if you're not able to get this, like you put your head really and why you're not able to get why 9,500. For once, it's okay. You can do the 21,000 regular into 6 by 12, no problem. Do it 21,000 into 6 by 12, no problem. You'll get a 10,500 maybe, which is fine. It's okay. Why I'm saying this, it's okay. Because in the past, I have seen two sums, okay, which is like this with the post acquisition impact. And in one sum, they took care of the post acquisition impact, in the other sum, they did not, which means they will give margin to students. If you make a mistake, let's say maybe very little marks could be dedicated, or maybe nothing they might cut. But this is the right way. So remove the impact and do. Okay, if you understand it, well and good. If you don't understand it, straight away take out 2,000, 21,000 and do a 6 by 12. Okay, but these are the unique, tricky elements in this sum. This intergroup loan and this part. Otherwise, everything was simple in this sum. Okay. So guys, I'll have to take a hard stop now. But anything quickly pertaining to this sum you all did not understand, let me know. Anything quickly pertaining to this sum you did not understand, let me know. Okay. So we'll take a hard stop now and we will see, I'll see you all in the coming session. And like I said, in the coming session, single entity PNL sums will be cracked and all other sums of consolidation PNL which did not get cracked. I think two sums are there which you don't have as a pre-recording, no? So that will get uploaded as a pre-recording. Don't worry. Either in any one of the sessions, the extra revision session I'll end up covering or it will get uploaded as a pre-recording. Don't worry. Okay. So thank you everyone. Take care. Have a good night. Good sleep. Thanks. Bye bye.